Hello, I'm Dora. I'm a chartered certified accountant here in the UK, and I run Grace Certified Accountants. We specialize in property tax, helping landlords, investors, and families make the right decision. Welcome to my mini-series on gifting property to your children. It's one of the biggest topics I get asked about, and it's an area full of hidden tax traps. In this series, I'll walk you through step by step what HMRC really counts as a gift, how capital gains tax applies, the 7-year inheritance tax rule, why living in a gifted property can do the tax savings, and alternatives like trusts, joint ownership, and even life insurance. Now, before we continue, if you want clear, no-nonsense tax guidance, especially around property, capital gains tax, and inheritance tax, subscribe now and hit the bell button so you don't miss the rest of the series. Now let's dive in. Let's get started with part 1, the basics of what counts as a gift in the eyes of HMRC. Giving your property to your children sounds simple. HMRC doesn't see it that way. HMRC treats a gift as if you sold the property for full market value, even if no money changes hands. This applies to rentals, second homes, and sometimes your main home. The biggest misunderstanding I see is this. Even with no cash, 2 taxes can bite: capital gains tax now and inheritance tax if you die within 7 years. A parent signed over their buy-to-let to their son to be helpful. They triggered CGT immediately. If they had died within 7 years, the gift could still have counted for IHT. Calling it a gift didn't bypass the rules. Now here are some frequently asked questions and answers. Question: if I gift to my child under 18, does that change the tax? And the answer? No. HMRC still treats it as a disposal at market value. CGT and IHT rules are the same. Question: if my child is under 18, do they need to register for self-assessment to report rental income? Answer: normally no. HMRC has a special rule here. If a parent gives income to a minor child, HMRC still taxes it on the parent, not the child. That's set out in Section 629 of the Income Tax Act 2005. In plain terms, if you gift your rental property to your 16-year-old, you still need to declare the rent on your tax return. The child doesn't need to register for self-assessment. Gifts from grandparents and through certain trusts can be different. Question: can I spread the gift over years to reduce tax? The answer? Not in the way most people think. Each transfer is taxed at market value on the date you make it. You can plan the timing, but you can't drip feed £1 and avoid tax. And one of my favorite questions: what's the difference between transferring and gifting? The answer? A gift means no money changes hands, but HMRC still taxes it at market value. A transfer is broader. It could be gifting, selling, or moving property into a company or trust. HMRC looks at the true market value, not the label you put on it. That's the foundation. In part 2, I'll show you how CGT on gifts is calculated. I'm Dora from Grace Certified Accountants. Remember to subscribe. See you in part 2.